Bitcoin falls to 76K after getting rejected by the 200 moving average on the daily chart. Are we about to go to 70K or can we rally back up above 80K? Let's find out. Welcome back to FlexCandle, where we read the candles and flex the moves. Right now it's about 6:45 p.m. Eastern time and the price of Bitcoin is currently at $77,040. We're gonna start off here with this winning trade that I gave you guys about 2 days ago. I was telling you guys that this is a head and shoulder pattern, left shoulder, head, right shoulder, and this was giving us the measure move, basically taking us to about the 100 moving average. That was approximately at around 75,500. We didn't make it there, but we did make it as low as 76K. So that's more than enough to take profit. So congratulations on whoever took this trade. This is a big win for the FlexCandle community. Now let's start off here with the weekly chart. Yesterday we had a close with a red engulfing candle, which was also tweezer tops. And I've been telling you guys on this channel, when we get tweezer tops, usually we have more downside. Look at this, tweezer tops. The next candle was red. Tweezer tops, we had 3 red candles in a row here. Tweezer tops on the red candle, we went sideways, then more red. We're holding above the 21 moving average, which is at 75,838. That's the only thing that I can say that is bullish at the moment. But look at the stochastics RSI are about to roll over. Now maybe we could do something like this where we roll over and then hump back up and then come down. If we could do that, maybe we still have a chance to make it to this 100 moving average at 88,254. But things are not looking good. We still have a whole week before this candle closes. We need to stay above this 21 moving average in order to remain bullish. Now we head over to the 6-day chart. This candle closes today in 1 hour and 15 minutes, and it's a big red candle here. Again, it's still bullish. We're above the 21 moving average, but the stochastics are rolling over. We need to hold this 21 moving average here as well. Now the 3-day chart also closing today. We've already had 1, 2, 3. This will be the 4th red candle. We need to hold this 50 moving average as support. If we lose that, then the 21 moving average is the next level support at 74,165, and we already tapped 76K and we held that as support. That was major resistance before. We really do not want to lose that 76K level because then it becomes resistance again. We have already battled that monster many times, so if we could stay above 76K, we still have a chance. If we lose that, it's not going to be looking good for the bulls. On the 2-day chart, candle is also closing in 1 hour and 15 minutes, and we lost the 80 moving average, and we kind of lost already the 21 moving average. That's at 77,225. Maybe by then we could still close above it, but if we lose this 21 moving average, boom, 50 moving average will be at 72,220. That means we lost a 76K level and also the 74K level. Stochastics still look like they have room to continue coming down before we reset. Now on the daily chart, I was telling you guys we were going to make it to the 200 moving average. That happened, but I also said that in most bear markets we usually go and tap the 200 moving average and then have a rejection, and that's exactly what happened. And then look at this example here, tweezer tops, we fell over, tweezer tops again, we also started rolling over. 1, 2, 3. We've had 4 days in a row of red candles here, and right now we lost a 21 moving average, which is bearish, and we're trying to hold a 50 moving average as support. That's currently at 75,644. If we lose that, the next level is the 80 moving average. That's at 73, and then you have the 100 moving average at 72. You lose that, then the next level will be this point of control, and that's all the way at 67,000, 66,000 around there. Now the stochastics look to have been reset here. Now we could start coming up, or we could also drag here for a little bit, but the fact that we got rejected off this 200 moving average is kind of bearish here, and we also lost a 21 moving average, so now we're really bearish. This is going to be our last line of defense, is 50 moving average. If we lose this 50 moving average, then and we cannot reclaim it, I have to start getting even more bearish, even though I'm already a little bit bearish now. Now if we head over to the 8-hour time frame, stochastics are reset here. Maybe we could start moving up. This candle closes in 1 hour and 13 minutes, and this is the reverse. As when I tell you guys we have tweezer tops, we usually fall down. This is tweezer bottoms, and if we get tweezer bottoms, we usually go up. Look at this example here, tweezer bottoms, then we had 3 candles in a row green. Now we are getting far away from the 21 moving average. That's at 79K. We can always rally back up and then eventually roll over if that's going to happen. Look, this is the head and shoulder pattern on that 22-hour chart that we took profits on, and look at this. This is also a rounded top. I always tell you guys, when you have a rounded top, we usually roll over. Now the 200 moving average is our last line of support here. That's at 74,206. Hopefully this tweezer bottom plays out and we can make a move back up at least to 79K, and we'll take it from there. Now on the 4-hour time frame, this is super bearish. We lost all the moving averages, especially the 200 moving average. Now on the stochastics RSI, we made a push for it, we rolled over, we're trying to make another push for it, but if we zoom in, this kind of looks like it could roll over as well. If we roll over, it looks like we're going to go for a deeper correction. Now could it be possible that this could turn into some type of inverted head and shoulder where this is a left shoulder. Maybe this is the head. We got to make it back to the 200 moving average. We reject and then make a right shoulder, and then all of a sudden we could be back basically to where we were a couple of days ago. That's a possibility, but we have to start seeing some strength, and we have to get back above this 200 moving average, which is at 78,324. Now the fact that the 21 moving average crossed down on the 200 moving average, that is bearish. Now we need to reclaim this 200 moving average as soon as possible, and then we still have a chance. But if we continue to close below it, we're technically already in this bear flag that you guys know I have in the daily time frame, which takes us down to about 49k, and we're already halfway into the bear flag. So if we cannot get above the 200 moving average, it looks like we could be falling down at least to the bottom of this pattern, and that's pretty much at 73k. Maybe we could get a bounce up from there, but it's not looking good that we re-entered this bear flag. Now in the 1 hour time frame, we have some room on the stochastics to still move up, but we are starting to get a little toppy. Again, I'm kind of liking this inverted head and shoulder feel that we're getting here, but this means nothing unless we could really get above this 200 moving average that's currently at 79,622. And on the 15-minute time frame, we still have not been able to reclaim the 200 moving average since we lost it. Since we lost it here on Friday, we've been below it. We retested it here again, and this time around we haven't even been able to get back up towards it. That's at 77,567. If we cannot get above this 200 moving average, we could forget about any other levels here. Now the stochastic show here that we're pointing down, this could be an M pattern, and this could bring us back down below the 21 moving average. So right now, guys, I have to tell you guys I'm a little bit bearish just because we did lose the 4 hour 200 moving average, and we're back into this bear flag. Unless we could reclaim this 200 moving average and get out of this bear flag again, I have to be bearish. I have no other choice, and this means that 50k is now in play. We did hit our targets. We were trying to see if we could make it to 85 to 88, 90, but the original target was 80k, 83k, around there. We pretty much hit that. We were trying to see if we could get a little bit more of the move, but we got rejected off of this 200 moving average on the daily chart, which usually happens in the bear market. So right now, unless we could get above this 200 moving average ultimately at 81,463, we have to be bearish. All right, guys, so that's the breakdown. If this gave you clarity or a setup to watch, do me a favor, like, drop a comment, subscribe, and if you have a stock or crypto you want me to go over, drop it in the comment section. This is FlexCandle, where we read the candles and flex the moves. Catch you on the next chart.